So when it came to day trading, the one pair that really stuck to my mind, like really got me going and has kept me going till now, is gold, because I feel like I've learned so much about myself through the process of it. I think you can really take what you learn through trading and kind of apply it to your daily life as well. I'm still learning, and I will continue to learn. Whether I'm trading 10 years down the line, you will always continue to learn. And
thanks for taking the time to do the interview.
Yeah, no worries, no worries.
Usually start with an introduction. So if you could just maybe give us a bit of a background on yourself, how long you've been trading, and
Yeah. So I'd say the first time I started trading was when I first started uni. I was living at home, but I had a student maintenance loan at the same time. So I wanted to kind of spread that further, because I've always kind of been entrepreneurial to an extent where I like to take money and buy something, resell it, etc.
Yeah.
But I've never really done that with stocks. So I started with stocks and shares, just normal stocks and shares, not like proper trading where you use leverage. I was buying like Nvidia at the time, investing in Netflix and things like that. And I had like a 20% return on investment in like the first 2 weeks, which was pretty good. Which, I mean, for a first time, just normal like stock trading, that's like not normal. But at the time, I think Nvidia was really kicking off. I think a lot of the companies at the time were investing in a lot. Yeah, so they were doing quite well. So that was my first kind of dabble into it. But in actual day trading, probably the beginning of this year, I'd say like financially was probably the main like reason why I would go into day trading, for example. I basically took out some of my like long-term stocks that I was holding. I was like, let me try day trading to see how it goes. And I've seen a lot of adverts and people talking online about making money and doing this and that, but I didn't really want to follow anybody. You know, like there's a lot of gurus and people who tell you, okay, you should do this, or you should follow my signals, or join my course. And I think, and I think it really misdirects a lot of people, and I think it makes it seem a lot more overcomplicated than it actually is. So I wanted to just dive headfirst and experience it for myself. So I took the money and I would just look at I started with just stocks and shares, but I'd use leverage on them. So for example, I would maybe put a trade down on Coinbase, but my initial metric to like place a trade would be look how much of a percentage is up or down or whatever, and I'd kind of look for like big companies, but on that day had like declined significantly, knowing that there's going to be a little bit of a reversal, right? That was just my initial beginner kind of brain to trading. It didn't always work out, and I learned that, especially in a lot of situations like Coinbase, where I place a trade on them, and the price would just keep going down and down and down, and I'd hope that it reversed back up. But then a month goes by, you're still sitting in the trade. And then you just have to cut your losses, and that's part of the trading journey. Is like you got to set your risk limits and stick to it. I think we really get carried away about, like, for example, there's been so many times, I think a lot of traders can relate to this, where you're in a trade, it's profitable, and then it starts, coming too close to take profit, it doesn't hit it, and then comes down, and you're hoping, okay, maybe it might come back up again, and then you sit in it long enough to the point it goes into a loss, and then you're like, okay, maybe it'll come back up, and then the loss
never does.
further. No, you just have to. The thing that I've learned most from beginner trading is like minimizing your losses as much as possible, especially when you're in a profitable position, not going into a negative, right?
Don't ever let it come back
at least being break even, basically. If you're in a positive position, rather than letting it go into a negative. And it's hard because we like to make money, right?
We like to be right. We don't like to be wrong.
Yeah, exactly. And you have to really put your ego aside. I think that's the biggest thing since trading from beginning to now. I'd say with day trading, my life changed a lot more. I think it became a 24-hour focus, especially when I started doing it. I'm a big my personality is very much, if I do something, I like to put 110% effort into it. So when it came to day trading, the one pair that really stuck to my mind, that really got me going and has kept me going till now, is gold, right?
Gold,
So
right.
the gold
gold.
paired with so gold. All I used to do was just literally sit there all day, if I was awake, and just watch the market on the 1 minute time frame. I would just watch it, and for some reason on the 1 minute time frame, if you watch it long enough, the stock, or not stock, but the commodity develops this personality, like the way it moves, the way it reacts to certain things, and so you just kind of learn to understand it to an extent. And I think you become a lot more confident just by watching it and looking at it and different time frames and just understanding it more. So I just dived in. I used to just watch the stock market all the time, every single session, Asian, London, New York. I'd watch all of them, the way it would react. And I know a lot of traders, they kind of stick to consistency. They'll stick to one different market. Either I'm trading London or I'm not trading at all. Some people do that. But for me, because I trade mostly support and resistance, if that price is going towards resistance and I feel like it's not going to break through it, then I want to be awake to place that trade. I don't care what time it is.
Oh, really?
So
that could mean a long day.
Well, yeah, well, all I'll do is put a price alert on. So I can go about my day. In the beginning, it wasn't like that, though. I had to learn how to be able to go about my day without trading being everything. I think that's the biggest thing with trading, is that it can really take over your life in a positive way as well, in a positive way as well, but also in a negative way. I think trading, once you get past the initial phase of having your kind of strategy and plan, it's all mental. All of it is mental. Being able to manage your emotions, being able to manage your risk, and just being able to manage the profits as well. Because I think the profits is the thing that has been my biggest downfall as a trader. I think when we make our biggest wins, we're convinced that we're doing something correct, and so maybe we risk a bit more, and
we get overconfident.
We blow on account based off of the fact that we think, okay, resistance is going to hit now, and it doesn't, but we risked extra because we took a big win.
We try and front run it because we think we're clever.
I think so. I think that's the case with a lot of people, being able to just manage themselves. I think we're our own kind of problem to an extent, but I think it's a beautiful journey, though, because I feel like I've learned so much about myself through the process of it. I think you can really take what you learn through trading and kind of apply it to your daily life as well.
You can get away with a lot in most jobs and in most things in life, but you can't get away with it in trading.
No, you can't.
It really opens up your eyes to who you are.
It does, and it kind of makes you appreciate everything. Like $1 profit is better than $1 loss, and when you kind of take that philosophy forward, it can really humble you, because rather than trying to be up $1,000 on a trade and hoping it comes back up, just taking that $10 rather than going into a $200 loss. It's an important thing. Becoming a break-even trader is probably the next step as a beginner, because as soon as you start breaking even consistently,
then
you can start letting trades. You can start letting
Mm.
trades run a bit longer, right? It's just the process of building that level of consistency within yourself, though. Finding your right risk ratios and how much you want to, rely on your strategy. I think a lot of people will change up their strategies on the regular, and it's good. I think it can kind of open your mind when you follow multiple different strategies and kind of test all of them. Some things work different for you. I think they also work for different risk ratios. I think different people have different. People like to risk more. People like to risk less. You follow a different strategy that suits you, and it's good. I know a lot of people argue online. Oh, ICT is the best, or this is the best, and that's the best. Like whatever works for everybody, right?
Yeah, it's whatever works for you. If you're profitable, you're profitable. Don't change.
Yeah,
If you've got a strategy that works, don't
Yeah,
listen to Twitter.
Mhm.
So, you still trading gold, or have you moved on?
Yeah, no, I still trade gold. For me, it's just a comfort, right?
Yeah.
Like I kind of know where I'm at with gold. If I was to go to a
Mm.
different thing, I wouldn't be as comfortable to place a trade, just because I don't know how it's going to react. I don't, especially during the current economy. I think gold has a lot more volatility than it usually would, which lends itself to being a better trading pair.
It's a great day trading asset. Yeah, it is. So
Yeah.
you're still looking at the 1 minute, or you moved up a
Well,
time frame?
so I look for, so when I'm in the trade or whatever, or I'm about to enter trade, I look at the 1 minute time frame. But to enter, like know to where I want to enter, I'll be looking at the 4 hour time frame and the daily time frame. Kind of looking at, okay, where's the overall resistance or support at, and where can I kind of place my entries. And then also looking for reversal. So like with gold, it's just been breaking all-time highs constantly. So I'm looking for reversals. Every time it's broken out, it's had a sharp reversal, especially in the last couple months. There's been like weeks where it's dropped by over 150 or 120 bucks. So I'm just looking for reversals. I'm looking for areas where it's come out and it needs to come back in, and the liquidity needs to hit. So
okay, so you're not a breakout trader. You're not looking to jump on the run. You're just looking for some kind of
well,
pullback, rebalance, that kind of things.
Sometimes if I'm watching it on the 1 minute time frame, I can see where, okay, it looks like it's going to break out here, right? That's why I do look at the 1 minute time frame if I'm going to enter a trade, because sometimes you can kind of tell. Or if I've seen on the 4 hour time frame it's double bottom, and then I'm assuming it might break through here, then sometimes I will enter a trade. Or if I've sat in the trade from where it's come from and I think it's gonna push out, then yeah, I will ride that upwards. But I would probably say, for me, mentally, it feels safer and more comfortable to enter when it's at a higher price than it should be, assuming that it should then come down. Because I think with gold especially, you have banks, you have governments involved, so you have people who want to take their profits.
Oh yeah,
somewhat fairly regularly, right?
Yeah, it's a dollar cost averaging asset. So I mean, people aren't just going to hold these things. It's not like a stock.
Exactly. So people profit take, right? Especially on Fridays, right? And nobody wants to hold anything over the weekend, especially with wars and things like that going on. You never know what's going to happen. So I feel a lot safer sitting in a sell position, waiting for gold to kind of come down a bit more. That's probably where I've ended up. I wasn't always like that. I was always, especially when gold was initially breaking out, like probably 4 or 5 months ago, I was sitting in a lot more buy positions. But I also realized, if in occasions where I'd want to run a trade for longer and not exit as soon as possible, holding a buy position on gold for such a long period of time, or a longer period of time, costs a lot on swaps. Swap fees.
Unless you've got a swap-free account. So
Exactly.
maybe that's something you need to look at.
Well, yeah, exactly. But I also trade on a personal account as well, which is like with the broker, right? So sitting on those types of trades, it costs more money as well.
Yeah,
so
sure.
You have to be careful.
Okay. So you trade gold with FundedNext as well?
Yeah,
cool.
Yeah, that's all I trade with the FundedNext.
Yeah. Okay, good. And you're happy so far? Have you funded, or are you in evaluation? I assume you're funded.
So I got funded on my first ever funded account with FundedNext. So that was the first company I ever went with as a prop firm, and I got funded straight away. On my account, it was 15K. I think my first payout was 4K, in 2 weeks, and
Nice.
that was that obviously includes the bonus refund, etc.
Profit share.
But it was a pretty good first experience with a prop firm, right? I've never had it, and I know a lot of people have different opinions about prop firms online, and they say, oh, some people don't get paid out, etc. I had my you know, questions. I didn't know what was going to happen, but it was fantastic. Actually, it was paid out very quickly. Went to bed. I entered the withdrawal, and I went to bed. Woke up, money was in the account, and I mean, from start to finish, it's been fantastic. Although I maybe got a bit overzealous and then blew that account, but
Well,
it happens. It's my first. I'm a beginner trader. You know?
Well, some people could argue that, you know, it's a prop account, so yeah, okay, best not to blow them, but it's only a prop account. You can blow them, and then you just buy another one.
Of course, I mean, I reinvested the money that I made on that account to buy more accounts. So
exactly. So yeah.
Well, I'm in the phase right now. I just got another account. I've barely placed any trades on that one, so I've just got another one.
Great. Okay. Good to hear.
Another one. So I'm in the process of doing it, but I've just been a lot more relaxed with trading. I think in the last, well, when I blew my funded account, I would say that I was trading a couple times a day, at least. Right, I was looking for the trades. Like I said, I was awake every session to try and make a trade happen, and I think that was a problem as well. You know, I think when I've limited myself to maybe a couple times a week looking for the best possible trade, I've had better success.
Yeah.
Right. It's looking for higher quality trades, trading less rather than volume. I think you're more likely to mess yourself up, especially on a prop firm account where, you know, you have to have the rules. Right?
Yeah, and I think if you can put some rules in place, whether it is how many times you trade or what sessions you trade or what times you trade, like you can really narrow it down to pinpoint. And if you've got some back testing to prove when are the best times, or for you, when are your back testing times where you win?
So I'll never do like a proper back test where, okay, I'll go back to a different time frame and see how it works out. But because I've kind of kept tabs on where the prices move throughout the day, mentally about, okay, I would probably think about entering here. Okay. And I wouldn't enter the trade though. I'd just watch what happens. Sometimes it would go in the favor of where I would mentally think it should go, and sometimes it wouldn't. And I'd keep a mental note of it. I know a lot of people will journal and they'll write it down, and that's good. But for me, I feel like for some reason, just keeping everything to myself in my head, just going with it, works better than just writing it down. I've never been the biggest writer of all my stuff that I've ever done.
It's all personal, whatever works.
Yeah.
So okay, so glad you're happy with FundedNext.
Fantastic! It's been a really good experience, and the prices are good as well. They're actually very reasonable for, you know, a prop firm company. I just wish the add-ons were slightly cheaper because I like the 95% off, 95%
profit share,
your profit share, and the bi-weekly payouts. So those are fantastic. The fact that you can just add those from the get-go and have the ability to use them.
Yeah. Okay. Cool. All right. Well, maybe they'll take that on board. Could you maybe share just to give some traders out there maybe an idea of what you're looking for? Can you give us an example of a trade setup? Maybe share a screen.
Yeah. Okay. So let me just share. So as you can see on the 4-hour time frame here, right? So like I say, I'm looking at a higher time frame so that I can see where the overall kind of resistance and support is. You see gold, it broke out here, right? Just above 2480. And it was met with resistance at 2528. So we're looking at a position here. So I did enter this first trade here at 2528 around here where it first broke out, and it was having a reversal. So I entered there, and I think I exited at like about 2500, just because I'd rather secure profits at that point. I didn't know if it was going to fully come back and reverse within the same period, but it did, and then that set itself up for a position of support because, as you can see, it had a great reversal to come all the way back up from 2470. So okay, now that's showing me that 2470 around that position is kind of a strong support position. Okay, so now I can maybe take a buy at 2470, and I know as of right now, for the fact that it's not been able to break above 2528, I could probably take a short here, and if I want to set a stop loss, I'll just set it just above that, right? So maybe like 2532, 2533. So if it does decide to kind of break out or get a bit sketchy, you're out of that trade, and you're in a lot safer position. So that's kind of a trade setup that I would look at. So I'm looking at the breakout. Okay, it's going to have to kind of come back, right, and reverse. It can't just come out. There's liquidity down there, right? So that's exactly what's happened. It's come out, it's come back down, and it's found support there. Okay, so now we know that there's two different positions. How is it going to break either position? Is it going to break resistance and push up higher, or is it going to break lower and find a deeper buy position if it can't break higher? And that's what's happening right now. You can see that it couldn't break through 2528 position.
Basically, we're stuck in a range, aren't we?
Yeah, exactly. And you're probably going to see it push lower likelihood, right? But you just never know. But that's the kind of general consensus you're kind of looking for.
Okay, cool. So break out, and then okay, cool.
There we go.
Back. Okay, thanks for sharing that.
No
so you're on a new evaluation, so
so I've only had like 2 trades.
Can't check out your
but I can roughly remember the initial the first account stats wise. So like my biggest trade, profit, loss, kind of. So on my first account, I think the biggest profitable trade that I had was about 1250. That was in one go. That was just a trade that I kind of took, and I let it run further than I thought it was going to go. To be honest, it just started going. I don't know what it happens with gold. Sometimes it'll literally just sell off $100 in a single day and a half.
Well, there's probably a news thing or a CPI thing, or
even if there's no specific news, for some reason there's like banks taking maybe money out, liquidating some of them. So sometimes it's unexplainable, even if there's no actual news event. Boom, $100. It's happened to silver as well, and I think obviously they're very linked together, silver and gold. And so when silver gets pushed down, gold gets pushed down with it.
The gold. I think the gold silver cross is like there's something about that is worth monitoring between the
it's a complicated relationship.
For sure. Do you look at any other assets like the dollar and the
so I'll keep track of the DXY and silver when I'm trading gold, but sometimes it literally doesn't make any sense. I mean, like gold's up and silver's down 1%, and the dollar's up. So what's going on here? Some things are just unexplainable, and that's a problem. When we place a trade, we think logically, right? And we assume the market's logical, but it's not. It doesn't think logically like you. If you expect it to move in your opinion, then it's going to be problematic. And I've experienced that. So you just have to have a level of unpredictability when you trade. You just got to protect yourself, I guess, right? But I let it run longer, and it made a more profitable trade there. And I think my biggest loss on that account was probably it was right at the beginning. Probably about $650 in one singular trade, but ever since I took that loss on that particular trade, my average loss dropped significantly because I kind of managed my risk a little bit better.
Do you keep it at a set amount or maximum percentage of the account?
It was more like, okay, how to explain this? So if I was placing a trade, I'd set my stop loss like how I explained, right above where the break-even point was. And there were occasions where when I took that 650 loss, I didn't stick to that rule, right? So when it continued going, and then it just decided to, okay, it's gonna break out. It's not a false breakout. It's not gonna come back in. That's where I got screwed. So sticking to that tight stop loss was important. So maybe staying 250, 300 on a 15K account. I wouldn't want to lose more than maybe now, more than 250, 300 in a singular trade, you know. But it happens because you get overzealous, and sometimes you. I mean, yeah.
I think you need to keep it within sort of 1%, 2%, maybe.
Yeah.
Otherwise, you're going to get very close to that drawdown limit.
Yeah, and also even if you lose like say 200 on a singular trade, you can at least, if you do find a good setup later in the week, you can trade again and not feel as bad, right? And not feel like, oh, you're gonna hit your total account's loss or whatever. Especially protecting your daily loss. That is the most important thing, I would say, because I think, myself included, that's where a lot of traders can really blow their accounts. You know,
we get into that sort of nasty habit of just trying to get back what you've lost, and then you just end up losing more. Do you limit yourself to trading? If you take a loss, do you just shut the laptop, or what?
No, in the beginning, that was not the case. It would be revenge trade. That's how I blew the account. That's how I blew the first account. I mean, the craziest thing happened on the first account. Let me tell you, I was in a trade. I had a stop loss on, and news was about to come out. I was like, okay, if the news comes out and it's not my favorite, it'll hit the stop loss, fine. It went in the total opposite direction. I was up 2.5 grand on the trade, right? And I couldn't believe it. I was sitting there with the close all positions, and I was like, what the hell, 2,600, and then it was going lower. It was going 1,800 now, 1,000, and then I was like, okay, what the hell's going on here? Do I exit? Do I sit for a bit? And then I eventually just broke even on that specific trade.
Yeah, that's the worst one, isn't it? Where it comes right back at you.
Then I was like, shit, what the hell? Okay, I'm gonna enter another position now. What just happened? And then I took a $400 loss on that, and I was like, oh, damn, okay, let's make another trade. Okay, it's gonna reverse now. It's just broke out a crazy amount. And then that's the mental game that happens.
You have to have a take profit figure, and you have to take profit at that figure, no matter what. Who cares if it keeps going? It doesn't really matter. You've made 2 grand. You should be happy.
Of course you do. Of course you do. And that's the thing that I've learned along the way. Because I mean, when I did that was about 3 months ago or so. So in that time, I have learned that it is good to have a take profit. It is good to take partials. It is good to exit out of a position while shut up to a certain extent, obviously. But yeah, it is definitely managing greed. Yeah, because you can always.
I think the easiest way to do that is just to set either a daily allocation. So just say to yourself, once I make $500 or $1,000 or however much, you just stop for the day.
Well, that was the initial. So when I started trading, that was it. I had a whiteboard in my bedroom. I had a weekly target I wanted, and I would try and work towards the target. And if I hit that target within the week, I would stop trading. Right,
and take the rest of the week off.
But the problem is when you start making more money, your targets move. And so your targets, when they constantly move over across a couple of months, and your daily profit target moves from $100 to $500 or something like that, then that's where it becomes problematic. So I would rather, in hindsight, if you're a beginner trader, stick to a reasonable target, right? And a reasonable risk, like you said, 1%, and stick to it for a little bit, right? And you're gonna make trades that maybe you're let run for a little longer, and you make a bit more money, but stick to your profit targets.
Stick to it until you're consistent, and then just up the risk, and then
because it's consistency, right? It's consistency. Rather than chasing the high of a lot of big trades. And I think we all like it. That's the thing, we're adrenaline junkies. Your dopamine is the highest as you just place that trade. We like to feel that level of discomfort that comes with the adrenaline of trading, but that's where it becomes problematic, because it's like
you got to make it mechanical. You got to make it mechanical.
Exactly. But it's a learning process. Look, I'm a beginner. I started at the beginning of this year. properly trading, and I still don't know anything. Right, I'm still
takes
learning.
a while. Takes a while. It's a long game, a long journey.
I'm still learning, and I will continue to learn. Whether I'm trading 10 years down the line, you will always continue to learn, and that's just how it goes. And you just have to keep your head up, and you have to keep going, no matter how many losses you have.
Yeah.
Just if it gets overwhelming, take a break. I took a whole month off. I went on holiday. I was enjoying myself, and
that can help. Just taking a break.
Yeah, because you just need that level of pressure off you, you know. And I think when you also trade for numbers, that's where it becomes really problematic. Rather than trading for a position, like I'm trading for this position to this position, rather than I'm trying to make $600 today, then you see a lot better success. I think when we chase the money, it becomes more problematic. But do you trade yourself? You trade as well?
I trade Nasdaq, but at very specific times of the day, and then very specific time frames. So I've really limited it, really brought down the entries model and the actual So it's very, very specific time just after equity open. I'm not in the market for more than an hour. So it's very specific. It takes a very little time, and for that, I find works best for me. Otherwise, I just overtrade.
Yeah. Well, it's really easy to overtrade on Nasdaq, because I used to trade a little bit on the Nasdaq when I was trading at the beginning, and there's just so much volatility in that that index. So you can trade. You can swing that index quite often. To be honest,
you can swing Nasdaq if you like, but that's not me. I can't hold trades. I'm just in and out. Morning session, that's it. I don't even touch the PM session because obviously I'm UK based, so
PM
so
how did you personally learn how to manage your risk?
I started with my own accounts initially, so I wasn't forced into it, because prop firms obviously have it all set in stone, and you have to adhere to their rules. So initially I had my own account, learned the hard way, obviously, like we all must do. But obviously then once the proper account system actually helped me personally, because then I had to adhere to their rules. I mean, it used to be a lot stricter. If you go back 3-4 years, it got a lot stricter. So that's what helped me. It's just having to deal with other people's restrictions and consistency rules. I mean, there's all sorts of things that are in place with futures prop firms. You can't just make a huge amount of money in one trade.
No,
it has to be consistent with your trades previous. So that's, in my mind, that prop can help you tremendously become more consistent and manage your risk, because you are held responsible. There's nobody holding you responsible with your own money. You could lose it all if you if I dare say you. So no, definitely prop can help with that. But
I'd say the same.
Just limiting yourself to time frame, asset. Obviously, the lower the time frame, you can fine tune the entry to the most possible. 1 minute. I don't go any lower than the 1 minute. You can. Price is fractal. We all know that. ICT tells us every minute it's fractal. But it's
Honestly, it's been the same opinion. Like I'd say prop firms 100% changed my opinion on risk that I would then carry into a personal account or something like that. I was a lot more looser with a personal account. I think most people are.
Because yes, you can be. There's nobody looking over your shoulder.
But when I started with the first account on FundedNext, and I was making profits, I was actually making better trades than I was on my personal account, because I'd be trading simultaneously. And I was like, okay, what's the issue here? Okay, well, I'm not carrying the same risk and smartness with the trades that I'm taking on my personal, rather than following the ones that are on my prop firm account, right? So as soon as I started kind of sharing the strategy between the two, managing my risk on both accounts, I think I had a higher level of success, exactly like yourself, when you manage that level of risk. Because I think you're like, oh, I can sit in a trade for longer if it doesn't necessarily go my way on a personal account, right? But then if it goes too far the other way and you hit a margin call and then you get liquidated, then it can be really problematic. But no, I guess it's true. It is.
Just have a clear idea of what time you're looking for an entry, where you're looking for an entry, and then just before you even get in, where are you going to get out? Yeah. Don't ever enter a trade if you have no clear idea of where you're getting out. You shouldn't be even looking for an entry.
Yeah, no, it's true. So, well, if you don't know whether you should be buying or selling, you shouldn't be entering from.
No, well, obviously, no.
I think a lot of people, they struggle though because they'll see a particular price or whatever, myself included, and you're like, okay, let's make a trade happen here. So we'll force a buy.
You can't make it. You can't make it. If it's not there, it's not there. No. Yeah. All right. I better let you go. Time's ticking.
Yeah, no worries.
Thanks so much for your time. Good luck with the next evaluation and the funded counts. And yeah, speak to you again.
Thank you. See ya.
Oh, see ya. Bye.
Bye-bye.